Hey everybody, let's talk about I was wrong. Home prices are crashing here in San Diego. Now, I'll leave it up to you if you want to call this a price crash, but I've been getting a lot of emails, a lot of messages. Probably the number one subject that I get messages about are home prices right here in San Diego from fellow San Diegans. So thank you all for watching this channel. I didn't know I had so many locals here, but I've been watching my inbox, and things are getting very interesting in the housing market, especially here in San Diego. Now, in one of our previous reports, I believe just a few weeks ago, we talked about how San Diego was one of the top 10 cities that are seeing price reductions. Also, San Diego is one of the most overpriced housing markets when you look at incomes. All right, but here's what's been happening. I'll let you decide if this is a crash. I've always said I don't think there's going to be a housing crash, but some people are actually calling this a crash. The numbers are starting to get pretty significant. This is reported out of San Diego Union Tribune, and that's where I'm getting this out of. It was reported widely in different publications, and this was put out by Greater San Diego Association of Realtors. The median price of San Diego homes dropped 5% just in August compared to the month prior. So from July to August, a 5% drop. That's pretty significant. It may not seem like a lot, but imagine if that happens every month. You're talking about a 40-50% price drop if that happens over, let's say, 12 months. Here's the deal, though. Home prices were $1 million. This is throughout the county. Median home price San Diego, $1 million median home price. Way above what we saw even at the peak of the previous housing bubble. Yet still people will argue that this is not a housing bubble, even though prices are heads and tails above the previous housing bubble, which we look back at and we say, yes, that was a housing bubble. So from $1 million now to $910,000. And this has just been over the course of 3 months. So 3 months in a row now, home prices have fallen month over month. So from $1 million to $910,000, a $90,000 price drop. Is that a crash? If your answer is yes, listen to this next part. 1 year ago, year over year numbers, from August 2021 through August 2022, the price went from $850,000. So last year, prices were $850,000. So in 1 year, a little over a year, technically a year and 3 months, we went from $850,000 median home price to $1 million. And then over the past 3 months, from $1 million down to $910,000. So we're still, from $850,000 to $910,000, we're still $60,000 higher than what we were about 1 year and 3 months ago. See what I'm getting at here? So even though that's a significant price drop, $90,000 in 3 months, we're still a lot higher than we were last year. For me to call this a crash, we're going to need to see home prices fall another 40 to 50%. So we're talking about from $1 million down to a median price of $600,000 to $500,000, and we're at $910,000. Just for me, that's my personal opinion on what a crash would be. And other people out there say it needs to be much worse. Other people say that it needs to go to where it was in 2008 because this market was propped up by a lot of manipulation, a lot of intervention, a lot of rescue programs. And maybe that's your opinion too. Let me know what you think, how far prices have to fall before we call this a crash. All right, more into the numbers here. Homes sold actually increased from the previous month about 15%, but year over year, we're down 30%. All right, so lower home prices bringing some people back into the market, but even with lower home prices, still lower than last year. The median price for condos, these are attached homes, multifamily units, things like that, that was unchanged. The median price is $605,000 county-wide, and that's still up from $550,000 from 1 year ago. Here's where it gets interesting. The zip codes and areas with the most sales are not the downtown San Diego area. It's mostly on the outskirts or outer county. So places like Fallbrook was one of the places that had the most sales in August. Ramona, North County. Oceanside, North County. El Cajon, East County, San Diego. So people are coming back into the market now that home prices are becoming a little more affordable. I still think it's too soon to buy. There's a lot of people out there with deep wallets, cash buyers. Having to get a loan right now to buy a home, not something I would want to take on myself because I know home prices are still way higher than they really need to be or should be. But if you are a cash buyer, then you're probably not going to be wiped out if home prices drop another 10, 20, 30, 40, 50% because you pay cash for it. Obviously, if you're paying cash for a home in San Diego, you're doing pretty well. But I'm doing okay, but even I am not doing that well to be able to buy a home for cash here in San Diego. All right, now let's talk about the direction for the overall housing market. As we have pointed out in the past few episodes, we are seeing a big surge in the 10-year bond. That means that the money guys, the powers that be, the Fed, they are letting rates rise. The 10-year bond spiked up to over a 10-year high. Mortgage rates approaching a 15-year high. So yes, we expect further weakness in the housing market. Now, one of my doubts that I've always put out there that I've said to everyone here, I'm sure all of you recall this if you've been on this channel, that I've said that I was worried that they would reverse course. I'm talking about the money guys, they, the Fed, Powell and crew. I was worried or concerned that they would reverse course much too quickly. And they could change this around in 3 to 6 months. It could come back and start cutting rates. So far, there's no talk of that. And we had a 0.75% rate hike at our last meeting. They're talking about another rate hike at the next meeting, maybe the meeting after that. And we're looking at between 4 and 4.5 Fed funds rate if they follow through on what they've been discussing so far. And that could make these price declines that we're witnessing even bigger in the coming 6 to 12 months. So if things continue as they are, and things can change, so I'm not making any guarantees, if things continue as they are, we will see even more significant price drops than we're seeing now, especially in the overpriced cities like San Diego, the Bay Area, California, cities that saw big influxes, especially since 2020. We're talking about Phoenix, Arizona, Boise, Idaho, Miami, Florida, and a lot of different cities in Florida saw big inflows of population for many different reasons. So yes, these mortgage rates are really putting a dent in the market. Not a crash still, in my opinion. I hope there is a crash. If there is a crash, if we see prices fall 50%, I will come on here and say, wow, home prices crashed. But if it takes 2 to 3 to 4 years for the 50% decline, even 2 years, I wouldn't call that a crash. But to each his own. Let me know down in the comments, please. I'd like to hear from you, especially if you're in California. Is this a crash? The median home price San Diego from $1 million down to 910,000. How fast and how far does it have to fall before you will call this a housing crash? Please let me know. Thanks everybody for being here. By the way, I got a little sleep last night. Can you tell? Do I look rested? Thanks everybody for watching. Bye for now. Peace.